We're joined this morning by the Peterson Institute senior fellow, a longtime China economist, particularly on banks, Nick Lardy, joining us. Nick, great to have you back on the program.
Thank you, Betty.
So, Nick, is China facing an inflation problem?
Well, it depends on your definition. Certainly inflation is rising. It's above the level they're comfortable with. They have been tightening actually now for about a year and a half, very, very gradually, trying to bring inflation down. But particularly if you look at the producer price index numbers, there's quite a bit of momentum here in underlying prices.
Right, and the fact that a CPI has, I believe, exceeded their target of 4% over the last 4 months, doesn't that tell you, Nick, that they're maybe raising rates, but they're not raising it enough?
Well, they're raising it gradually. We've had now several moves over the last few months, and that's the style in which the central bank operates. They do go 25 basis points at a time, incrementally. They've also been raising reserve requirements, which is a more certain way of slowing down the rate of growth of lending. But they did have a big growth of lending in January. Those numbers were also announced yesterday.
Okay, so then if you were at the PBOC then, Nick, what would you now be looking at? Would you be looking at perhaps changing what has been a long-time policy there?
I think you'd see continuation. I think we'll see reserve requirements boosted again sometime over the next few weeks. They want to slow lending growth down. It's been running close to 20%. I think they'd be more comfortable if it was down in the 16, maybe 17% range. And that's going to require quite a bit of slowdown in lending growth over the next few months.
But Nick, is it lending growth? Is that really the problem here, or is it more that food prices are going up and up?
Well, I think they're inseparable. They've had very rapid monetary growth over the last couple of years, although, as I say, it has come down quite a bit already.
Right.
But it needs to come down. Further, and I think that you'll see them continuing to rely on the reserve requirement and interest rates. There is a question about how interest sensitive the demand for loans really is. So the more certain policy instrument for them is to raise reserve requirements. They know exactly how much cash that immobilizes in the banking system and slows down the rate of growth of credit creation.
Right. So that takes care of what we're seeing is a lot of easy money, perhaps in the Chinese system. But let me just focus in on the food side of things, though, Nick. What can the Chinese do, though, to stem this food inflation, which I think is in the double digits now in terms of growth in China?
Yeah, on the month-over-month basis, on the year-over-year basis, food prices are rising at a little bit more than 10%, which is quite concerning. They've released some stocks into the market. They've tried price controls. That has not been very effective. I think they're going to have to live with that until they get a supply response. They do have a very responsive agricultural sector, so you'd expect to see over the next 4 or 5 months some substantial increases in production of the items where prices are going up the most, and that will help to bring things back down by the time we get to mid-year or a little bit beyond.
But is that easier said than done, Nick, for China?
No, I think they've got a very, very responsive agricultural sector that responds to price signals, and a lot of this is in vegetables and other commodities, the production of which can be increased very, very rapidly in relatively short period of time, months, not years.
So, bottom line, Nick, we are not looking at we're not looking at China on the verge of any social instability because they can't control their food prices.
No, I don't think so. I don't think social stability is a question yet. I don't think they're going to have to slam on the brakes on the monetary side so hard that they're going to slow the economy dramatically. They're walking a very fine line, slowing credit growth down as they've been doing now for more than a year, but not wanting to pay too high a price in terms of slowing of economic growth and job creation.
Nick, always great to talk with you. I appreciate it. Nick Lardy, what I've called sometimes an uber economist on China from the Peterson Institute. Thank you.